Hey, everybody, it's Greg Harrelson here with my co-host, Abe Safa, and we are just going to do another episode of the Real Geeks, coaching that we do every week here in the Real Geeks Facebook page. So I'm excited about today. We're going to talk about getting your buyers off the fence. I think there's a lot of people, Abe, that are frustrated right now in the real estate industry. They've got a lot of buyers in their database, but it seems like nobody's moving forward, or they're moving forward at a slower pace. So we're going to talk today, everybody, about things that you can do to get buyers off the fence. So Abe, real quick, we're just, because this comes out every week, we're just coming off what last week, the interest rates. Boy, there was a decline in the interest rates. And I think based on our kind of our video that we do live for our databases, you shared that was the lowest single day rate drop in the history. Am I saying that correctly?
Yeah, the biggest drop in one day. It dropped 60 basis points. So on Thursday, it went from the average 7.22 mortgage rate to 6.62. So 0.6% in one day is a record for the biggest drop in one day.
Yeah.
So that was significant.
Got it. Yeah. And one of the reasons I wanted to start off by asking you for clarity on that is because, it was the basis of one of my calls today with a bunch of buyer's agents in our office. And this morning at 7:30, I have a call with a bunch of them. And I asked them, hey, did you all hear about that? And they all said, oh, yes. And I said, okay. So my next question was, all right, well, did you have conversations about it with your buyers? And they said yes. And I asked them to give me some examples, and they said yes. Well, I was showing property with this one buyer, and I told them, hey, you should call your lender to see what the interest rates are right now, because there was a significant drop the other day, and this was over the weekend. So a significant drop the other day. And I'd like you to just kind of talk with the lender just to make sure that you understand where the rates were. And I had two of my agents ask the buyers to do that over the weekend. Both of them did it. One of them ended up having the confidence now to write an offer, and another one did not necessarily write an offer, but was thinking about waiting till next year to buy. And then all of a sudden they said, oh, you know what? I think we're going to get a little bit more serious and see if we can do it this year so we can lock into this rate. And maybe you can just negotiate an extended closing. So just in a few examples, or samples, I should say, of when my agents talk to their buyers about it, the buyers, it positively influenced the buyers. Now, here's the most critical question that I think I asked the agents. Okay, how many of you created an email or a text or a workflow and sent that out to your entire buyer database this weekend? And not one of them said yes. And that kicks off the conversation on getting your buyers off the fence. See, they were physically in front of a few buyers, and that was one of their talking points. And it helped get one of them off the fence for sure, helped one of them move a little bit forward. But think about how many people are in our database that are on the fence, that if they knew that, let's not, by the way, assume that all of the buyers that are in our database have any clue that last Thursday or Friday there was a significant drop in interest rates. Let's default to they don't have a clue. And if you haven't communicated this through a workflow in your Real Geeks database, through your Real Geeks CRM, then they still have no clue. Or they do have a clue, but somebody else clued them in, and will get them off the fence. Thoughts on that?
Yeah. I mean, of course, everyone out there, I'm glad that all your agents knew that there was a drop of 60 basis points. So that's good. I think everybody out there should be paying to this number every single day. I don't work with buyers, and I look at mortgage rates every single morning. Every single morning, I look and see what the average mortgage rates are for 30 years. And it literally takes me 5 seconds to pull up the number. Okay. So people should be aware of it. And Yeah, I think people are watching the news. I think people are hearing it, and we saw a spike in activity. At least I felt a spike in activity since Thursday. Dude, I don't know if you got numbers company wide, if you saw a difference or not. But I think more buyers were out there looking, and a couple of the mortgage guys that I spoke to felt like that there was an increase in traffic as well. So it's something that
Yes.
we've got to be in touch with every single day, at least have a pulse on it and know what's going on.
Yeah, I talk a lot of times in coaching that we need to
Mhm.
be we need to respond, not react. Okay. But I'm going to kind of like contradict myself right now.
Okay.
When we hear something like this happening, we got to react, and we got to react fast. If we want to get buyers off the fence, we need to be the first ones to tell them this news. Now, in my opinion, I do believe interest rates are going to go back up over 7%. I do believe that. I'm not trying to manifest it, trying to attract it, or convey negative news. I just think that that was a little blip, and that's an opportunity for some buyers to get off the fence, take some action, lock in. Now, because I think the average was 6.62. Now, can you imagine if your buyer was to buy now, lock in at 6.62, and then have the seller fund or finance a 2-1 buy down? That means your buyer could get 4.62 over the next 12 months, and then 5.62 for the 12 months after that. And then if they don't refinance, it goes up to 6.62. But by that time, they're probably going to be able to refinance. I will ask another question, and of course, it's not for you to answer, but it's for people to ponder. Do you know that dialogue? Do you know the dialogue on how to explain how the 2-1 buy down works? Because if you do, you should be using that to get your buyers off the fence. All right, what else do we have, Abe?
Yeah, I mean, the one thing I want to add is like, look, buyers agents out there, you have to know what these movement and interest rates mean. Like, you have to
Yes.
know, what your average price point is in your market, whether it's 350, 370, 600, depending on what market you're in, you need to know what that number is. And you need to know what a drop in 60 basis point in a mortgage rate means in payments. So it's got to start there. You have to know your numbers inside and out. So when you're having conversations with buyers, you can actually have an intelligent conversation and not get caught up in the emotion of I don't want to buy because interest rates are high. I want to wait till they get lower.
Mm-hmm.
Okay. So it starts there. And the second thing is
Yeah.
you have to dig a little bit deeper. Okay, what does lower mean to you, Mr. Buyer? Like, how low do you want? Because I guarantee you there's just so much emotion out there right now that buyers don't even know the difference in payments, but they're thinking that, okay, well, I don't want them right now because they're too high.
Mm-hmm.
Okay, so I guarantee you they're not waiting for 3% to come back again, because that's not coming back for a very long time if it ever does again, right? So you got to get that out of your head that, okay, it's either a good time because of rates or it's a bad time to get because of rates. There is no yes or no, black or white. There's a lot of in between. So know your numbers, ask the right questions with your buyers, find out what number are they wanting to get down to. Okay, is the interest rate really that important to them, or is it just a payment? What would it take to get them to
Mm-hmm.
the payment? Like Greg mentioned, the 2-1 buy down. If we can get them to their payment over the next 2 years, regardless of what their mortgage rate is, would that work? So I think conversations like that have to be brought out with buyers.
Yeah, it's a good point. So, it kind of leads me to another thing that I wanted to share on today's episode, and that is, um, do you know the real cost of today's interest rate? Do you really know? And does the consumer really know what the real cost of today's high rates are? And I was just messing around with a calculator. I've got this comparison calculator that my CFO created for me, Abe, and I just put in, like, for it, just as an example, is, do you really know? Like, 7% seems like a high interest rate, but 7.25, or let's just say interest rates were 6.87. I just randomly took a number. Okay. 6.87 sounds significantly lower than 7.25 for most people. It's kind of like 99 cents or $1. Like, if it's got a 7 on it versus a 6 on it, it makes it sound way higher. But the difference between 7.25 and 6.87 is only $89.54. So for a year, that means the payment would be $1,074.42 more between those two interest rates. Even 3 years, it would only be $3,223 is how much that interest, the additional interest expense would be between those two interest rates. And most people would say that they believe that people are going to be able to refinance within 3 years. So the question becomes, like, if the buyer has a choice, they can take 7.25% interest right now and pay $89 more per month, or let's call it $3,000 over the next 3 years, and refinance, versus don't buy, interest rates come down, and the price of the property goes up by $40,000 or $30,000. If the price goes up by $30,000 because interest rates come down, then that buyer is going to be paying $27,000 more than they should. They're not only are they going to be paying the $30,000 more, they're going to get the interest rate that they want, but they're going to have to pay $30,000 more in sales price to get it. Why don't they just pay $3,000 more in high interest rate or high interest payments over the next 3 years, then buy at today's price? Buy at today's price, understanding you have to pay $3,000 more in interest, versus not buying and buying at tomorrow's price, $30,000 more, and getting the interest rate you want. You could actually get the price you want now, and in 3 years refinance and get the rate that you want. That's why, and I'm hoping I'm doing an okay job at this, that's why you've heard this comment out there, and it's marry the property, date the rate. Because if you date the rate for the next 3 years, that's $3,000. But marry the property means lock it into today's price, because we all know that when the interest rates went down, prices went up. Right now, interest rates are going up, prices are coming down. So the people that are complaining about the high interest rate, they're surely not complaining about getting a discount on the property. Well, if you want a discount on the property and a discount on the rate, let me tell you how to do it. You buy now at a discounted price. You pay a little bit of an inflated rate for a few years, which is only going to cost you $3,000, and you turn around and refinance it into the rate that you want. Now you got the rate that you want at the price that you want. This is how we get people off the fence. We have to be true consultants, advisors. We have to be educators, because right now, guess who's educating our buyer? TV, CNN, Fox News, CNBC, Fox Business Network or channel. That's who's educating your client. Are they educating your client in this way, or are they educating your client in doom and gloom? The earth is going to go under. Abe, I think that's, when we talk about getting your buyers off the fence, this is the message that I really want to send to agents is your value is to understand the true cost of these interest rates and be able to articulate it to your buyers. That is your value as a real estate professional. We can't just sit back and hear interest rates are going up and just feel like victims, because that's what the buyer's doing. Our job's to be the solution.
Yeah, and we have to interpret what the data means and what it means to the buyer. Yes. That term, God, I saw it thrown around the industry so much. Marry the house or marry the home and date the rate, right?
Yes.
But I don't see hardly any agents diving deeper into what that really means. Diving deeper into what the numbers really mean, like you just explained to people. I think that in itself will get some of your buyers off the fence. The ability for you to have a deep conversation with them and explain to them, look, this is what it means. Right now, there's an opportunity for you. The opportunity is getting the home that you want at a good price. that window might close very quickly. If interest rates start going down, that window is going to close real quick. Okay. So what's going to happen is, yes, you might be waiting for a better interest rate, but at the end of the day, you're going to be paying a lot more for your home. And then crunch the numbers down to them. And look, you guys remember, it wasn't that long ago where it was actually okay and normal in many markets for buyers to ask for closing costs, right? We can do that now again. We're in that kind of market in most cities around the country right now where buyers can ask for closing costs, and then you can get and apply it to interest and do a 2-1 buy down or 3-2-1 buy down or whatever it may be to get them to even a better payment right now to buy yourself 12, 18, 24, 36 months. Okay, so they can refinance. It's actually a good time to be a buyer, because I tell you this, if interest rates get anywhere near 5%, if drop below 5%, those buyers, they're not going to get a home anymore, because I think we're going to get back to what we were pre the interest rate hike, and then homes are going to be flying off the shelf again, is what I think is going to happen.
Yep.
So this
prices go up and affordability gap broadens. So you'll be able to get one, but you're going to have to downgrade in what you get in order to be able to afford it.
There is no chance you're going to get today's prices at a 4% interest rate. It's just not going to happen. So either way, okay, they're going to pay what they're going to pay. So at least break down the numbers to them and look at the payment and see what they can afford. And then once you get them off the fence, then look, use your skill at that point to negotiate either a lower price, or again, if interest is really that much of a big variable for them, then buy down the interest rate for a couple of years.
Yeah. I mean, my example was like, okay, when I was saying $89.54, that's the difference in 7.25 and 6.87. Now, if the buyer can buy at 6.87, and on top of that, they do a 2-1 buy down, so they get it to 4.87 for 12 months. And then they get it for 5.87 for 12 months after that. Then they refinance. I mean, man, this buyer they're going to look like a hero in a few years. The agent, so I guess what we're saying here is, if you want to get more buyers off of the fence, you've got to learn this conversation. Like, you should be, in my opinion, and hopefully this doesn't sound, egotistical by any means, but you should take this recording and listen to it over and over again. You should write out this script, and you should go have these conversations with every one of your buyers, because I can assure you, you have enough conversations with your buyers, and here's what your buyers are going to say back. Wow, I've actually never had anybody explain it to me like that. By the way, I don't think it was a real estate agent that came up with the marry the house, date the rate. That was a mortgage person that came up with that, I believe. Yeah. I believe it was a lender, and that would make sense, because they would understand these numbers a little bit more than a real estate agent would.
Yeah, let me give you an example, Greg, of kind of it clarifies, not clarifies, but it really solidifies your argument of, as an agent, you have to be informed, you have to know your numbers, and you have to be able to explain them to buyers. I think buyers are acting really emotional right now. Just for example, this past week, when the interest rates went from 7.22 to 6.62, almost everybody I've spoken to, whether it's a lender, whether it's an agent, felt like that they had a pickup in activity, right? Mm-hmm. On a $400,000 loan, the difference in payment between a 7.22 interest rate and a 6.62 interest rate is either $140 or $160 a month on a $400,000 home. Like, it's not that significant. But the reaction from the buyers was significant because of the news, because of the hype. The biggest one-day drop ever. Everybody got excited. This is the time to jump back in. Mortgage applications went up. Offers went up. $140, $160 difference in payment. So that the buyers are going to act emotional. We can't control that. But you as an agent should not be acting emotional. Okay, you should be logical. You should be trusting the numbers, looking at the numbers, and being able to explain the numbers to people. So this way, the ones that aren't acting, you show them the numbers, and hopefully that it'll make sense to them to be able to make a move right now.
Yeah, and I agree 100%. So the other thing that I wanted to say about getting your buyers off the fence is we have to be careful. And I know this is more mental than it is anything else, more mindset related. And I've got on my notes here that we must stop thinking as real estate professionals, we've got to stop thinking that nobody's buying. I mean, if you just go into your MLS and you look at how many transactions closed in the last 90 days, there are plenty of people buying. Is it less closings in your MLS than there was the previous year? Absolutely. But I'll tell you another thing that's less. There's less real estate agents working right now. Now, you may say, but Greg, no, in our MLS, we still have the same amount of licensees. Yes, because the renewal period hasn't come up yet. So there might be less sales, but there's less buyers going after those sales. You just got to make sure that you're not one of them. There are buyers buying. There's buying that, like, if you look at your number of leads, like let's say you've got 5 good leads right now, or 5 leads, and in your mind you only got 1 good one. It may seem that, wow, gosh, no one's doing anything. But you cannot be judging the current people, your pipeline. You have to look at the overall market and say, there are a ton of transactions going on. And when you start to realize there's a ton of transactions going on, maybe they're not going on with you right this second, there's a ton going on, then get into action. Then go out there and start doing something to communicate with more buyers. Like right now, workflows within the Real Geek CRM have never, in my opinion, have never been so important as they are right now, because it does require we communicate and engage with more people to even sustain the business that we have. It's not talk to more people to do more deals. It's talk to more people just to do the same amount of deals. So that whole concept of the numbers game, it applies more today than it's applied probably in the last 5 or 6 years. But in order to play the numbers game, you've got to leverage technology. You're probably not in the routine or habit of calling 30 people today. But you could take 30 people out of your database and kick off an email, a workflow that consists of an email or 2 emails and 2 texts. You could do that to 30. So you could reach out and connect to 30 people today if you use the workflows. But I always think that our activities are influenced by our thoughts. A lot of real estate agents are thinking nothing's going on. Therefore, that thought influences an activity or influences someone to be inactive. And that inactivity, that action or lack of action, influences our results. So we got these thought, and then all of a sudden we got these words. Oh my gosh, nothing's really going on. And right after that thought and words, boom, that influences our actions, which is we're not taking action. And then we're actually influencing our result by not having any results. So what we need to do right now is we need to just understand that there's plenty of business out there and not enough real estate agents going after it. That should be our thought and our words. And then take some sort of action, which is at the minimal, just make sure every single contact in your Real Geeks account is communicated with over the next 7 days. You're going to find a lot of people that say, I'm going to do nothing, and you'll find more people that'll say that they're going to do something. What were we going to say?
That's a big deal. That's really a big deal, because transactions are happening. Yes. Less are happening now than previously. Okay. And yes, I can definitely feel your frustration if you feel like, man, everybody I talk to just doesn't want to do anything right now. But people are still buying, people are still listing, stuff is still happening. You just need to talk to more people or communicate with more people. You have to increase your bandwidth. Okay. If your number, if it was 1 out of 50 before, it might be 1 out of 100 right now. So you have to increase your bandwidth. It's like you're out there fishing and there's less fish in the sea. You just get a bigger net. That's increasing your bandwidth. get a bigger net, and you're
Yeah.
going to catch some that are selling or buying. It's as simple. Talk to more people, and there's no better ways in the workflow. Just utilize it.
Yeah.
Create some work. One workflow right now. I would do two workflows. One for people that have kind of been active, and then ones that just completely stop being active. Get them back in the game. Talk to more people. You're going to fish out some buyers and sellers. There's no question about it. They're there.
Yes. Yeah. There's plenty of business. And just remember, I'll leave y'all with this thought. In 2010, it was one of the years that there was the least amount of sales over the past, say, 25 years in America. In 2005 was one of the two largest, or at least most closings in a year. That 2005 was one of two of the years that had the most closings ever in the last 25 to 30 years in real estate in this country. In 2005, when it was the most sales, the per agent production was around 5. In 2010, when it was the least sales, the per agent production was around 8.5. The agents working in the down market sold more property than the average agent who was working in the hot market. There's plenty of business out there, and there's fewer agents working the business than you think. There are plenty of agents that are already putting their applications on Indeed looking for other jobs. All right, Abe, that's it. Get them off the fence. Get them off the fence by just understanding there's plenty of business, but more importantly, you get them off the fence through conversations, by educating them, by being a true resource and letting them understand the financial side of interest rates and buying now versus buying at inflated prices. And by the way, one of the ways that we get versed on this information as well as we can is we actually have these conversations with lenders, and we get a true understanding of how to have these conversations with buyers. All right, Abe, I think that'll be a wrap.
All right, Greg. Thank you all for watching. We'll see you next week.
Thank you, everybody. Bye.